Hey YouTube, welcome back to my investment journey series. This is a series on my YouTube channel where I take you guys through all of my investments as a complete beginner to the world of investing and stock markets. I just started investing at the beginning of April, not long after the lockdown was put in place here in the UK, and I take you guys through my whole portfolio once a week as a sort of review video, just so you can see what's been going on. So believe it or not, we're now actually on episode 11 of my investment journey series. So obviously last week was episode 10, and that was a really good week. Stocks had been rallying for the entire week, and we finished strong, up at 11.4% say overall in the portfolio. However, this week has not been good at all, and there's a few reasons for that, which I'll explain in a few minutes. Basically, we are now down to 3.9%. So like I say, last weekend, the portfolio was 11.4% in the green. Now we're at 3.9% in the green. So the portfolio has actually dropped in value by 7.51% overall. So yeah, not too great, but let's get into this and see what's been going on. So just to cover a few things as usual, my ISA utilisation for the year is at 21%. I've now invested a total of £5,534.95 this year into my Trading 212 account. And as you can see there, I'm now showing a return of £216.08, which, like I just said, is 3.9% in the green. And the portfolio value overall is £5,751.03. Last week, as I mentioned, we were shown a return of £607.51 in the green, so we were up. It had been a great end to the week. Like I said in my last video, stocks have been rallying continuously throughout the week. I managed to purchase the Nasdaq finally, which was something I'd always wanted to do. And yeah, it was looking really good, finished strong. I was a bit skeptical, thinking this can't continue. Surely there's going to be something happening soon, which is going to correct the markets in a way. And right enough, this week that has happened. So let's just see what happened overall. I'll take you to Monday. Stocks did start to climb again, and it actually looked like things were getting more and more promising overall in the portfolio. So we went from £607 up to Monday close £642.36. So the portfolio had been going up, and again I was thinking, wow, this is great, but again, can this continue? Tuesday came around and we started to drop, and then we started to drop again. Tuesday day finished, leveled out around the £500 mark, and came to Wednesday and again started to drop and drop. Thursday came along, steep drop as you can see, so we went from £454.61 and we dropped right down to the 200 mark, £282.65. And then Friday again didn't get any better, and we dropped even lower, down to 3.97%, and by the time the market closed on Friday, we were sitting at this point here, £216.08, which is obviously where we are now. So yeah, not a great week at all, and like I say, there's been a few reasons for that. Obviously, there's all this uncertainty still with the whole pandemic the world's going through, but the biggest reason this past week for the markets crashing all comes down to the Federal Reserve in America. Now, if you don't know what the Federal Reserve is, let me just open up my browser here and we can have a quick look. The Federal Reserve is basically they're also known as the Fed. So if you watch other YouTube videos, or if you read a few things online around the world of investing, stock markets, finances, etc., you'll commonly hear this referred to as the Fed. And as it says here on Wikipedia, it's simply the central banking system of the United States of America. So they recently had an announcement last week saying things were looking bleak, and there wasn't any positivity from them at all about markets correcting, about things getting back to normal anytime soon. As you can see here, the Guardian came out with this: stock markets fall heavily as another 1.5 million Americans claim benefits amid the COVID-19 crisis. And it goes on to explain about the Federal Reserve and the fact that they can't see a recovery happening anytime soon. And then also here, New York Times mentioned similar things recently. This has been like an updated story over the weekend, but as you can see here, Fed warns of extraordinarily uncertain path to recovery. and they just kind of, it's all negative. It's not the sort of news you want to really be seeing, but at the same time, I'm taking this as positively as I can. I'm thinking this will be an even better chance for us to continuously buy into the markets and keep adding to our portfolios at more of a sale price. So the investments I've already got, I'm going to be adding to continuously, and I'll be able to do that at an even cheaper price because, like I say, the markets have crashed again even lower. It was something that we all kind of expected to be happening, and right enough, it's came along now. Also, recently here in the UK, it's all been announced that April was about 20.4% decline in the economy. So again, it's just all bleak, negative news. And when you add all this together, it kind of makes sense why you see everything crashing out on the stock markets when you look into them in detail. So one thing I will say I did find quite funny was Donald Trump, his tweets. Here's one in particular. Federal Reserve is wrong so often. I see the numbers also, and of course, in Donald Trump fashion, he does a much better job than they do. Basically, he was saying America's going to have a very good third quarter and a great fourth quarter, and apparently the best ever year in 2021. So, yeah, take that with more than a pinch of salt, if you like, when the words coming from Donald Trump's mouth. But at least he's trying to keep people positive, I guess, even though I really don't ever listen to his advice or his words of wisdom, as I'm sure a lot of people don't. Anyway, let's get into the meat of the video, as usual. We'll get into the portfolio, we'll get into my investments this week, and we'll see exactly what's been happening. So let's go down to my investments as usual and see what's been changing this week. So we'll start with my American Airlines. If you've watched my previous videos, you'll know these were the free shares I received when somebody signed up through one of my referral links. And if you're interested in signing up to Trading 212, or if you're interested in getting involved in the world of investing, please stay tuned until the end of this video, and I'll explain to you guys how you can benefit with a free share worth up to £100 in value. But yeah, here we go. Let's have a look at this over the last week view. So American Airlines, it was actually doing extremely well, and considering it was 2 free shares I received, I was over the moon with how well they were performing. So it was up at the $19.73 mark, and at the start of this week, and it's continuously dropped, to be honest. It did rise again a bit on Wednesday, and again majorly over Thursday into Friday. Friday it did climb back up and then leveled out again. So it's been a drop overall this week of 9.95%. So not too great for American Airlines, but there has been much worse ones this week. Again, I'm not too bothered. These are free shares. It's not something I invested my own money into. Extremely grateful to have them, and I'm going to keep them as part of my portfolio just to see what happens. But that's how they're looking this week. So down, say, roughly 10% in the space of a week. We'll go into Hive Group. Now again, if you've watched my previous videos, you'll know this was a complete gamble of a stock for me. Something I don't really advise you guys do. Always do your research, but this was one I just kind of took a lucky punt on just to see what would happen. So at the start of this week, they were up pretty high. They were up at or pretty high for them recently, should I say. So they were up at 135 pence, 135.3 pence, and they just continuously dropped throughout the week. It's been overall a drop this week of, as you can see at the top there, 12.39%. Not great at all. I didn't have a huge investment with these guys. As you can see there, I've got 25 shares, which works out to be £29.85. So it's still up overall for me with this investment. But over the course of the week, it's not been great. They've dropped, as you can see. So that's another one that's not looking too healthy at the moment. Come down again to the iShares Core FTSE 100. This is a big one for me in my portfolio. So this is, if you don't know, this is the top 100 companies in the UK. And this is an ETF that I've been investing. This was actually my first ever investment. If you've been following since episode 1 of my investment journey, you'll know this was my first ever investment, was into the iShares Core FTSE 100. And they have, because it's obviously the UK economy, the UK market of the top 100 companies, it's just been a continuous drop, as you can see here. It's actually down overall 6.71% this week. Started around the 640 pence mark on the Monday, and we're now sitting at 597 pence. So as you can see, it's a good indicator of how the UK markets have done this past week, and it's obviously not great, as you can see there. But overall for me, because I bought in when it was extremely low and cheap originally back in April, I'm still up overall with this investment, so that's good news for me, but not looking good for the next few months, to be honest. iShares Core S&P 500. Obviously, this isn't going to be great after the news. As you can see, here we go, not good at all. After the news, like I mentioned earlier in this video, with the Federal Reserve coming out, it's started off, say Monday, so Monday lunchtime, it was at 2,530 pence mark for a share, and we're now sitting down at 2399.77, as you can see. So this has dropped overall 4.64% last week. And this is also another big investment for me in my portfolio. I like to focus on my ETFs as my main bulk of my portfolio. The iShares Nasdaq 100, like I purchased recently, and I mentioned this in my last video, episode 10. So this has been pretty turbulent, as you can see. So this focuses a lot on the technology sector, the top 100 technology companies. It's not purely technology companies. I did mention this more, again, episode 10, if you're interested, go back and check that out. But it did start climbing quite well, actually, as you can see. As it ended on the Friday, it took a steep decline, pretty much fell off a cliff. Look at that, not good at all. So it went from the 44,111 straight down to 43,260. So overall, down 0.35% last week. So not massively down, but especially when you compare it to some of the other markets, but it's still down overall. So again, not looking too positive. The iShares S&P 500 healthcare, this has also been one which has just completely fallen over the space of the week, and it's kind of painting a picture, if you've not already noticed, that it doesn't matter what sector you were invested in or what sector in the US economy or even the UK economy, they've all taken a hit which could be tied directly to the Federal Reserve's news. So that's just another example there, continuously falling over through the course of the week. It did have a little spike here, on the Wednesday, but it didn't last, as you can see, and then it just fell again, and we're now sitting down at this point here. So we're down overall 6.22% last week. So yeah, not looking great. Legal & General Group, this is another one I've been invested in for quite a while now. In the UK, again, it's down 10.89% overall. I'm not going to mention much more on them because I've spoken about them a lot in previous videos, but basically they're down. MGM Resorts, this is kind of another one I took a little bit of a gamble on earlier last week. There was a lot of news of Vegas reopening and some of the casinos starting to reopen and look into plans to put social distancing measures in place. There was also talks of boxing matches. I think there actually was 2 boxing fights that happened at one of the MGM resorts last week. With all that news basically around Vegas and the casinos, and basically all these gamblers over there itching to get back in the casinos and spend all their hard-earned cash or their hard-earned savings into gambling, I thought, why not take a little punt and put some money onto MGM Resorts. So I did invest £76.37, which got me 5 shares with them, in the hopes that it would have climbed with all this news. But then I think what's kind of countered that is the news from the Federal Reserve and all the uncertainty around the economy and how it was actually going to be a much longer recovery period than everybody was expecting or everyone was hoping. So because of that, it's just another market, it's another investment of mine, that has just continuously dropped throughout the week, really. I'm glad I never put more money into them. I was always trying to keep it under the £100 because it was one of those less researched ones for me, and it was again, as I keep saying here, just a lucky chuck some money on it and see what happens, which again, I don't advise you guys do, but I felt like doing it in the case of this. Didn't really work out yet, but it's probably going to still be a long-term hold for me. Something important to remember, you don't make a loss unless you sell at a loss. So yes, it's currently down, it's currently in the red, but keep in mind, it's only a loss to you if you actually go and sell at a loss. So again, with that, I'm going to keep hold of this investment until it's back in the green. It might be months away, it might be years away, but I'm not going to sell at a loss. National Grid, I've got my 3 shares still. These are again free shares. Another one, it's looked like it climbed a little bit at the start of the week, dropped, climbed, dropped steeply, started to climb, and then kind of stuck there. It's not one I'm massively focused on again because these are purely free shares, so I'm not really going to talk about that too much. But basically, all you need to know, it's in the red. It's dropped 0.33% last week, so that's also been affected. Royal Dutch Shell, big one for me. I initially invested a few months back when the oil price futures had reached negative for the first time ever. But over the course of this week with Shell, they've dropped 9.02% overall this week. And it's just not looking great at all right now again. They were actually looking really good. So if I go to the month view, you can see they climbed really, they were actually a big mover for me. And they climbed quite high. They were up at the 1,480 pence a share. And now they're down again at 1,299 a share. So yeah, just another one that's continuously dropped throughout the week. Like if you've watched my previous videos, this is a long-term hold for me. And I'm not worried about them overall. As you can see here, my actual investment, I'm still up overall with Shell, £19.35, 1.95% overall in the portfolio. Long-term hold for me, I'm not too worried with them. Now we'll come down to Valaris. This complete lucky punt again, which clearly hasn't worked out very well because as you can see here, over the course of last week, big drop. Another one I've not researched too well. I'm going to be honest, the only reason I invested into here is because it was so cheap to do so. Not a good idea overall because it's now showing a loss of minus £22.55. So it's actually down 50.66% overall, this investment. Luckily, I only put in £21.96, so it's really not a lot of money. That did buy me 26 shares. Saw how cheap it was and I thought, why not chuck some money in there and see what happens. It's kind of like a little bit of fun money. Although I do take this investing seriously, I think it's important as well to give yourself a little bit of leeway where it's not all focus and research on every individual stock. Again, this is just my own opinion. Don't listen to me. I'm just a guy on YouTube, complete beginner. So don't follow what I'm doing. But I wanted to have a little bit of fun money that I could just kind of throw into that and see what happens. And yeah, it's not looking good. Again, it's not one I've researched at all, to be honest. I know the basics about them, but we'll see what happens with them over the next few weeks, over the next few months. But overall, it's not looking too great. Although, apparently, as you can see here, they're actually up 15.13% last week. Probably one of the only ones that's up. But it's not made any difference to me overall in the portfolio. So yeah, we'll see what happens with that. And then finally, again, the Vanguard FTSE Emerging Markets. This was actually doing extremely well for me before it started to pick up massively, as you can see here. So I invested down here when it was extremely cheap, in my opinion, for what you're getting. It was under the £40 a share mark, and it has been climbing extremely well. And if we go to last week's view, it is actually another one that's, as the week went on, it was performing okay. It was up and down, but then it took a steep drop when it came here to Wednesday, at just before market closed in the UK. It took a really steep drop here, and we're now sitting at £42.44 per share. Not looking too promising for that ETF at the moment. The Vanguard FTSE Emerging Markets down last week 2.66%. Not as much of a faller as some of the other investments I've got, but again, this is a long-term hold for me. I'm not expecting to get rid of this anytime soon. This is at least a 3 to 5 years minimum. And I'm going to continuously be adding into this as well as the months go on. Looking at my allocation overall, we have 12 investments in the portfolio. Total value £5,751.03. So the FTSE 100 still taking up the biggest chunk, which is 26.81%. The S&P 500 is 24.6%. Royal Dutch Shell, RDSB, 17.62%. Vanguard FTSE Emerging Markets is at 12.14%. I've got my NASDAQ 100, 7.51%. Legal & General, 5.64%. iShares S&P 500, the healthcare sector, 2.5%. My lucky punt of MGM Resorts, 1.33%. Hive Group, another one that was quite a lucky one when I made the investment, at 0.52%. National Grid, my free shares that I received, 0.48%. And other, which is my 0.85%. I'm not too sure why it actually states that as being other. I'm guessing that would be the Valaris shares, and also, actually it must just be the Valaris shares. It's maybe because it's such a small amount they don't actually show it, just kind of chucks it into the other category. I'm not too sure. But yeah, that's at 0.85%. So that's how things are looking this week. But we're still up, we're still in the green overall. We're showing a return of £216.08. So it's not all bad news, but that could well change over the course of next week. I've seen plenty of other people that's done their portfolio reviews that are firmly in the red now. I seem to be one of the lucky ones that are still actually showing a bit of green, and that's mainly due to my ETFs of the FTSE 100 and the S&P 500. If I had purely invested into individual companies, I think I would be showing in the red right now, but because I'm ETFs, which are making up the bulk of my portfolio, as you can see, the FTSE 100, S&P 500 making up the bulk, that's kind of helping to prop everything up, and that's why I'm still in the green. So yeah, we'll see what happens over the next week, and we'll see if any other news comes out regarding the recovery amidst this whole coronavirus pandemic. If you're interested in getting involved in the world of investing and you're looking to sign up with Trading 212, which is the app that I use, it's a platform I use, it's the one you've been watching throughout this video. It's also the one I recommend using because I just think it's the easiest and I like their whole layout, I like the interface. If you sign up through my referral link, which I will put in the description below this video, I will also put a pinned comment in the comment section. If you click on that link and create yourself an account in Trading 212, you will receive a free share worth up to £100. It's definitely worth doing if you're looking to sign up because at least you're getting something out of it. I will also receive a free share worth up to £100 just to let you guys know. You saw in this video and also some of the previous videos if you've watched them, some of the free shares that I have received. So I've received some free shares in National Grid, American Airlines. I've also received in Shell, which are some of my most valued ones. So you do receive some decent shares. It's not like they're just really poor shares like you might think would happen considering they're free. If you're interested, check out that link, create yourself an account, and when you do receive a free share, please leave me a comment below in either this video or any other video, it doesn't matter, and let me know what the free share was that you received, because I'd be really interested to see if we happen to get the same one or if you maybe got something even better perhaps. Hope you've enjoyed this video, guys. This has just been another review of my portfolio on Trading 212 at the end of the week. This is something I do weekly, just in case you're not already aware of that. If you have enjoyed this video, please click that like button. Really appreciate it. Leave me a comment below and also consider subscribing to the channel so you can be notified of all future updates and all video updates that I'm coming out with. I've recently done a video on Trading 212 and recurring deposits and setting them up if you want to, and also a video on Trading 212 and dividends, how you can check for your dividends that you've received or dividends that are due to you that's coming up soon. So yeah, check those videos out as well if you're interested, and I will put a link below to my investment journey series, the playlist, so you can see everything from episode 1 if you so wish, and you can kind of follow along from there. But other than that, guys, click the like button, leave me a comment like I say, and I really hope to see you in the next video.